Hi. Now we're talking about the different types of taxes, and how they are collected. First is income tax, personal income tax. Now I can receive income as my salary, as my paycheck. I can receive income from a property that I own, that I rent. I can receive income from a car that I own, that I use as a taxi, or I use as a taxi, and so on and so forth. So income tax is any taxes paid on the personal income, money that a person receives. If I get a paycheck, if I am an employee and I get a paycheck, the taxes are deducted before I receive my money. And this is called withholding. This makes the system more efficient. It costs less to collect this amount of money. Withholding. Every worker, every employee has a gross salary and net salary. They deduct the taxes. Which type of taxes? It's the income tax, besides plus the social security tax. So part of the taxes that I pay from my salary is a general income tax that the government takes to provide public goods and services. Another part, the social security, which is for my retirement, for if I become disabled and unable to work, if I am unemployed, it gives me support. Number 2, corporate tax. Corporate tax is when a corporation is functioning to produce at the end of the year, when they complete their balance sheet, they have profit. That profit is taxed. There is a profit tax, and then they have the net profit. After they deduct corporate tax. The point is, the net profit is distributed as dividends on people, on shareholders, dividends. This dividend is part of the income of people, so they are taxed again. As shareholders, they are taxed because the corporation is a separate entity from the shareholders. Therefore, the corporation is taxed at first, and then the shareholders as they receive their dividends. Okay, there is the excise tax. 3, excise tax. Excise tax is a tax on a product, on the production or selling of a product. Sometimes the producer pays it, sometimes the consumer pays it. We pay it when we go to the supermarket, or it is added on the value of any product, the VAT, the value added tax, which they tax on products that we buy. Number 4 is the estate tax. Real estate, property, but property transferred. So if I own a house and I sell it, when I go and register the selling of this product, of this house, we pay an estate tax. Or if I buy a house from someone, or a piece of land, or whatever, this is when we transfer the ownership of a property, a real estate. There is the gift tax. For example, if one of your parents decides to give you a gift as a house or a farm or whatever, when they register it in your name, they have to pay tax. Number 6 is the customs duty. Customs duty tax. And you know that the customs duty is on imports, جمارك. When we buy something from another country, we pay taxes or tariffs. It's the customs duty. This is one kind of taxes. Okay. Now, so we talked about the types of taxes. The last part is the impact of taxes. What is the impact of taxes on the economy? The taxes is considered a tool that the government uses to achieve certain goals or to achieve certain results. So the impact of taxation, impact of taxes. There are 3 effects, broad effects that can be explained or addressed. First is resource allocation. Second is growth and productivity. Third is consumer behavior. So resource allocation. In the example that I gave in the last video of the yachts, when we said when the government imposes taxes on certain products that the producer will not be able to pass over to the consumer, and the producer will have to pay it. Sometimes the producer finds out that it is not profitable anymore to produce this thing. So they decide to shift to another production, like the example of the yachts. If the government believes that what is being spent on the production of yachts should be transferred to the production of something more beneficial to the economy, it would impose taxes on yachts. Then the producers would find that they're going to lose a lot of customers if they pass over the tax to the consumer. Yet, if they pay the taxes, it is not profitable. So they decide to shift. A good example would be the businesses now that are shifting from producing cars to producing ventilators. Now, if there's enough production of cars and I need more ventilators, and if I impose more taxes on cars, I would encourage producers to move to the production of ventilators. Growth and productivity. When we calculated GDP, one of the things that was not counted in GDP was the underground economy. And we said most of the underground economy is not economy, is an unreported business or production. Why it is not reported? Because they want to escape paying taxes. So what if the government decides to tell those people, I will not tax you, just report? Then GDP would increase, then growth would be higher. Another thing is if the government imposes taxes, high taxes on corporations, it is discouraging corporations from expanding. Then it is affecting growth and productivity. On the other side, if it says if the corporations pay money on training their workers, this money will be exempted from taxation. It is encouraging the increasing in productivity. The third is consumer behavior, and there are 2 things, either to encourage or discourage, a certain behavior. To discourage, it is called sin tax, and we talked about it, that if the government imposes high taxes on cigarettes or alcohol or gambling, then it is discouraging people from consuming such products. Encouraging is like tax rebates. And I said, it might tell people that if you pay a lot of money on educating your kids or on growing plants in your area to offset the effect of pollution and so on, I will reduce the taxes I impose on your income. Then it is encouraging people to do that, discouraging people to do that. That's it. Bye bye.